Hey guys, let's see if we can get everybody on here. Hey guys, it's Chris Mincolla with the Mincolla Group over at West USA Realty, and I'm here with Evan Einhorn with his own brokerage now, Modern Home Lending, and we're here today. We're going to be talking about a few things, but before we do, I want to remind everybody to make sure that we're here every Wednesday at 1:30. Okay, every Wednesday at 1:30, and also you can watch this video later on Facebook or YouTube. So be sure to like, follow, subscribe, and share with your friends. We'll keep this going every week for you guys. So I wanted to also remind you that we'll be having some giveaways here again pretty soon, so we'll keep you updated on that. And without further ado, we are going to start asking Evan a bunch of questions. And our topic today is going to be how to get a better deal on your mortgage. We're going to talk about things that impact your rate on your mortgage. So good topic to know whether you're a first-time home buyer or not. You want to know these things, right? You want to know how to save money and gain more equity on your home. So, Evan, how you doing?
Yeah, good.
A little busy? Are we keeping you busy?
Yeah, it's a very busy summer. Summer is very busy, but it's such a hot market right now that anyone looking for a home, anyone in our business knows it's just crazy that, any well-priced home is listed, multiple offers typically, just because of the low inventory. So a ton of buyers out there buying. So, it's been great for us, but, I'm always trying to get people the best deal, and I'm excited to talk about this today.
Yeah, that's why we like working with you. You try to get people the best deal. And
right.
So let's definitely start right off with our first question right off the bat, and that will be type of mortgage company. What does that have to do with getting the best rate? And how does that impact your rate?
Yeah, so on a high level, there's banks that you can go to. You can walk into anyone bank. If you talk to anyone in the industry, not just me, anyone in the mortgages or real estate, they're typically not going to recommend your bank because that's not their bread and butter. Their bread and butter is checking, savings, credit, kind of that kind of stuff. There's direct mortgage lenders, which are great service and whatnot. And then there's also mortgage brokers, which Modern Home Lending is a mortgage broker. And, there has been a comeback, and, there's some pros and cons to each of those. I'm a little biased, but I became a mortgage broker really for the consumer, because we can get them better deals. So.
Okay. And guys, don't be afraid to ask questions. Okay. Jump in there, and again, share us, like us, make sure you're following us here. All right, so next question: how does the broker work, or how does a broker work? How does
So there's a lot of myths out there, like, hey, if you're using a broker, it's going to be more expensive because there's a middleman, and it's actually quite the opposite. Me being in the industry a little while ago, that's what I thought too. But brokers can typically get their clients better deals. And there's a few reasons because of that. One, they're not loyal to any one specific lender. So if one lender is pricing very well on a day and another's not, they'll go with company A versus company B. If you just work for a direct lender, you just have one company's rates. So you have access to a ton of different options, a ton of different, programs. And again, lenders know that I have different options, and if for some reason they're not competitive, then they're not going to be getting the business. So they're really fighting to get the deals. And two, lenders love working with brokers like us because they don't have to pay a loan officer, they don't have to pay a processor, they don't have to pay health insurance, benefits, they don't have to have a nice big office. Literally, they just have to fund the deal and underwrite the deal. So it actually is less work for them, and I know this sounds crazy, but they'll give me better deals. They'll give me basically wholesale deals that I can never get from a broker. So So it's kind of an interesting setup. So yeah.
Okay. Um, what? Okay. So, what would be the major things that would impact your rate then?
Yeah. So we'll go over a ton of things, but credit score, that's the number one thing that comes to mind. The better your credit, the better rate you're going to get because you're a more trustworthy person as far as financial goes. With most programs, same thing with down payment and equity. The more down payment, the more equity you have in the home, typically the better rate or better program that you'll fall into. So those are two big ones. And then the third big one is the type of program you're using. So, if you're a veteran, veterans get to take advantage of a great VA loan. Their rates are typically lower than a standard conventional loan. And then if you're buying in the luxury market, that will have another impact on your rate. So those are the three main ones, but a lot of people don't realize there's over a dozen different things that impact your rate. And that's kind of where I come in and guide people of saying, hey, you're at a 690, but let's get you to a 720 so we can help you get you a better deal and into a better program. So as far as a credit score goes. So I'm all about helping people save money because there's so many different things that impact your rate that just people don't know about.
Yeah. There's a lot of things that can impact that for sure. And, guys, just another reminder to ask any questions you have as we go along here. Don't be afraid to ask any questions. Let's talk real quick about the timing. Like, sometimes we have people that want to wait to talk to you or wait till something is going on in the market or whatever. What's a good time as far as timing?
Well, it's just like the stock market. Like no one can ever know, hey, when is the stock market going to go up? When is it going to be down? The biggest thing that I look at, and you don't even need to take my word, you can Google it, is everyone is expecting interest rates to go up. So if it's something you're considering and you'll be somewhere for a while, you might as well get your new mortgage now. So you might as well buy a home or refinance now versus waiting till a few years down the line. And again, no one has a crystal ball, but if you read any top, financial analyst out there, they're expecting rates to be in the low to mid fives next year. Yeah. And right now they're almost at 5. The national average is in the high 4s already versus last year, the national average was, closer to 4%. So buying now versus later. And I always tell my clients, like, I'm not, I'm here to educate my clients and help them get a better deal. I'm never in a rush to help them close their deal. I talk to clients 1, even 2 years out from when they're ready to buy. But if you can buy now before interest rates go up further, then you have more buying power. Again, no one has a crystal ball and can guarantee that. But if you read any article out there, I don't have a PhD in economics, but anyone that does that has, talked about this does expect rates to continue to rise. So,
yeah. And a big thing that drives that too is the economy, right? I mean, in general, as well as other factors. So,
right. On a high level, and this is not an absolute every time, but typically as the stock market improves and as the federal government raises their rates, then mortgage rates increase as well. When one of the largest tumbles I've ever seen of mortgage rates drop in one day was the Brexit a couple of years ago. When the stock market tanked, mortgage rates dropped in one day. But the economy is doing pretty well right now. So, I don't foresee the mortgage rates, jumping up crazily, but they've been on a pretty steady, continuous uprise over the last 7 months or so.
Yeah, we've seen a lot of people back to work and stuff, but maybe the wages aren't quite where they want them to be yet. But I think over time, over the next 6 months to a year, we'll start seeing that shift also. Hopefully, yeah. Right?
We'll see. Especially in the Phoenix, Arizona area, like jobs and our wages here have skyrocketed, especially compared to the rest of the nation. So that's huge.
Absolutely. And real quick on the rates, while we're talking about that and timing, if people are like, well, I'm going to wait till next year till, I do this or that, how much of a difference could they be seeing then in an actual payment, I guess, would be the end result?
So here's a fun fact that I was looking at because I'm all about improving credit to help you get a better rate. But if it's very long term, so here's a fun fact. A client that had a 580, this is on an FHA loan, but I looked at this the other day. A client that had a 580 credit score in November of last year got a better deal than a client today buying with an FHA loan with a 720 credit score.
Wow.
So, I mean, that just goes to show, like, yeah, if it's something that, hey, I can boost you from a 580 to a 640 and it's only going to take a month or two and it's going to help you save on your rate and whatnot and you're not in a rush to buy, that's great. But that's one example that I like to put, that if there's something stopping you, let's take a look at how big that makes a difference to your rate, because you might not catch up to the market if it does continue to increase as everyone's expecting. Again, rates could stay the same, but all the experts are saying rates are going to continue to rise.
Right, yeah. Okay, what about the type of payment, like a type of payment or mortgage insurance, down payment, all that kind of stuff? How does that affect the rates?
Yeah, so there's a ton of things. Like I can go over a ton of things that a lot of people didn't think could impact their rate. So first off the bat, like your location and state. So a lot of people don't realize from state to state, different lenders do have different parameters. Now, they're not going to be that big of a difference, but hey, you might be charged an extra few $100s here versus California because our loan amounts are smaller and our foreclosure rate was higher back in the day. Again, not a huge thing, but that's one thing that impacts your rate. Your type of mortgage insurance. So on a conventional loan, if you're getting a conventional loan, there's actually multiple different options for mortgage insurance. You could pay your monthly mortgage insurance. You could have the lender pay it and have no mortgage insurance and have a higher rate. Or you could pay it out front. Another one that people don't know, property type. Chris, do you know which property type gets the best interest rate?
The best interest rate?
For a property type, like condo, townhome, single family, manufactured.
I would think single family.
Yeah. So that's right. So a lot of people on a conventional loan, a lot of people don't realize condos, properties that are classified as condo townhomes, you do get a slightly, your loan's going to either have a slightly higher rate or slightly higher fees because multiple things, because one, slightly higher foreclosure rate, and two, there's a lot more work involved on the lender side.
Right.
Same thing with manufactured. Manufactured is even higher than that because manufactured, unfortunately, doesn't appreciate as much because, it's more of a diminishing asset. The land on, it's appreciating, but that's another thing, that manufactured homes have higher rates. Other things that can impact your rate, if you're using a down payment assistance program or not. I have clients right now everywhere from a 3.75% interest rate to a 6% interest rate locked. So that just goes to show, the person at the 3.75 they're paying extra fees, they have good credit. The person at the 6% is using a very, very, very special down payment assistance program where they don't have mortgage insurance. You know what I mean? So, just down payment assistance alone, rates might vary from 4.5 to 6%, just on one program. So there's a lot of different things that, I help my clients understand. Hey, why are you getting the rate that you're getting? And is there anything we can do to get a better rate? So, yeah.
Right. And obviously, if they get to you sooner, go through everything and start the process sooner, then they're going to be in better shape once they get there, as long as they follow your plan, basically.
Right. I mean, I'm all about education. Once someone talks to me, they'll understand where they're at. I say, hey, here's where you're at now. If we can improve it, here's where you could be at. Or, hey, here's how long it's going to take you to where you want to be. So I'm always, trying to figure out, hey, what are your short-term plans? What are your long-term plans? And trying to find a mortgage that fits your needs. So,
right. Awesome. Okay. Well, Anything else that you wanted to add in, Evan, that you think we missed or didn't cover on that, on getting the best rates?
No, I'm pretty transparent. Mortgage brokers do have a lot of advantage over banks because the different investors kind of fight for our business and they don't have to worry about their overhead. So as long as you work with a mortgage broker that keeps overhead low like we do, then you're going to get a great deal. I think one of the big, one of my biggest pet peeves is when someone calls me and says, "Hey, what's your rate today?" And that's where I come in and I help say, "Hey, let's figure out what you're looking at and let's figure out what the rate options are." Because, I hear people say, "Oh yeah, I got a 4.25 on my mortgage." That doesn't mean anything to me because I don't know what loan program you have. I don't know if you have mortgage insurance, what your down payment was, etc. So my number one goal is to make sure that all my clients are educated and they have multiple rate options available. They're not just stuck with one set rate, one set fees. We can, I think you've seen it. I can help cover closing costs on a deal. And that's where rate comes in too. So, I'm pretty open, transparent. If anyone ever wants to give me a call, Chris has my contact information and it's modernhomelending.com. Yeah, you have any other more questions for me, Chris? It's been great being on today again.
If you have any other questions for Evan, modernhomelending.com, 602-456-2273. And of course, you can always contact us here at the Mincolla Group of West USA Realty at 480-788-8569. You can call or text Cynthia and I here, and our team would love to be able to help you out. Or you can check us out online at mincollagroup.com and home at mincollagroup.com. Or I should say mincollahomes.com. So, Evan, anything else we can share with them today on rates? Where are our rates right now?
I can't really quote, without APR and all that legal jumbo and compliance jumbo, but for the most part, conventional rates, are in the mid to high fours. For the most part, FHA and VA rates, are in the low to mid fours. So, but like I said, everyone's situation is different. I have everyone from 3.75 to 6. So,
right.
I can always get anyone a custom quote. So without even running credit. So.
Awesome. Okay. All right. Well, thanks for joining us, guys. We'll see you next time. All right. Let us know if you have any questions. Thank you.
See you later, everyone.